So Israel and Iran are in a war. This is the biggest war in the Middle East, uh, probably since the Gulf War. It's also it's the wars in the Middle East are Iran versus Iraq, or uh, you know saber rattling. Or when we had the Gulf Wars, it was United States versus Iraq. But this is Israel, a key ally, versus Iran, and people are wondering how this is going to shake out. And the dynamics are moving. It's ever changing, but this is not the same Middle East. As I like to say, this is not your father's Middle East. So why did the stock market seem to more or less step over this, with half of the losses in the major averages on Friday were recovered today? And investors just don't seem to be particularly, I'm not saying they're not concerned, they're on edge, but they're not making dramatic decisions based on this. And we're going to talk about why and what's next for investors, and how to read all the tea leaves and everything going on. So let's roll a quick intro, and I'll be back in about 20 seconds. And this is going to be pretty impactful, and I'm really looking forward to the show. So here we go. All right. Thank you for watching. This is a live stream, so I'm doing this live. You're seeing me mumble and stumble over my words. That's what live streams are all about. But if you're watching this in the replay, it's the same thing. So if you don't mind, I'm going to ask you to please give it a thumbs up. Ask your questions in the comments. I consider myself an objective, unbiased market watcher and strategist. And what I want to do is give you information, share with you what I know, just give value and help you make better financial decisions. So there's a lot to unpack here. So we'll start by saying I've been talking about geopolitical events since I've been in the business, which is over 35 years now. And I will just reiterate what I always say every time there's a geopolitical event in the world. And I could just name so many that in the last 35 years, I really can't count them all. But, we talked about 9/11. We've talked about, since I've been in the business, impeachments, all kinds of scandals, a number of wars, Great Recession, tech blow up, lot in politics, tariffs lately, so many things to talk about. Wars in Europe, right? The war in Europe. I don't make decisions based on geopolitics. It has never been a good idea to do that. The markets rebound very quickly, and we sidestep these issues because what happens is we go back to focusing on the fundamentals. I think back about conflicts with the Middle East, 6-Day War in Israel, the Yom Kippur War. I was born during the 6-Day War, by the way, in 1967. No. So let me just tell you a couple of things. The market has rebounded after all of these. All of these were supposed to be a setback for the market, and they weren't. And the market's just marched higher and higher since I've been in the business, and we've had a lot of geopolitical events to move over, to skip over. The market does not, I don't want to be flippant about people's lives and danger and conflict, but we're talking about the market, we're talking about investing, and we're talking about making, we're talking about making very important financial decisions. And the strategy, to start with the end in mind of the show, is to just keep doing what you're doing. If you're 30 or 40 or my age, 58, I'm still investing into my retirement plan, dollar cost averaging. Nothing's changed. I didn't make one single change in one single account of mine or any accounts that I manage for my clients. Nothing, based on what's happening in the war now in the Middle East. Because geopolitical events, again, they come to pass. Typically, what happens is oil goes up because we get worried about oil production, the supply of oil, and the free flow of oil. So even if oil production is okay, if the oil can't move out of the Strait of Hormuz or something, that impacts the global price of oil. Gold usually gets a bid. Bonds usually get a bid. Those are the exact things that happen on Friday. It's called the flight to safety trade. Never changes. And then a day or two later, it starts to unwind. And those things give back some of the gains, and the things that went down, like risk assets in particular, the stock market starts to recover. We've had one heck of a recovery after the tariff/trade wars that have been initiated in April, and the markets basically rebounded almost all of that, and then a little. So we're just going from the tariff situation when the market took a quick 19.9% swoon down, recovered, and then we go into this. Now, I can understand that a little fatigue could be setting in with all the politics going on and the tariff talk, and now the war in the Middle East, and plus the ongoing war in Ukraine. So I don't blame investors for being a little exhausted from geopolitics, but the market is going to keep going and going and going. And if you're someone who thinks that you're just going to sidestep this, you'll step out of the market and you'll step back in when the coast is clear, you're probably selling when things are down and you're going to buy back when things are up, because nobody gets back into the market until things get better, until things are more clear, until they're more comfortable. And that typically means stocks go up. So when you're panic selling, I'm not saying you specifically, but if somebody panic sells, that person is just creating nice buying opportunities for people like me. So thank you very much for giving me your stock on the cheap. I don't want you to be that person. I certainly don't want my clients to be that person. So Israel is bombing the hell out of Iran. Iran's bombing Israel back to much less effect. Already, Iran is asking Qatar and Saudi Arabia and other Middle East countries to approach the United States to say, please get Israel to enter into an immediate ceasefire, and we will come back to the negotiating table for nuclear talks. What sparks this is that the regime that controls Iran sees that this could really result in the toppling of the regime. They basically have no way to win. And the worst thing to happen to the regime is that the price of oil went down a little bit today. It went up less than 10% on strife. It used to be a war in the Middle East. Oil would go up huge, stay up huge, and we'd be talking about how we're going into a recession immediately. Today, the United States is the biggest oil producer. We don't need oil from the Middle East. If Middle East oil, in particular Iran, is cut off, it would hurt a little bit for the United States, but we would get past it. It would mean that the Federal Reserve would hold off in lowering interest rates. It might mean that President Trump would have to extend the absence of tariffs, or he would have to put off the reciprocal tariffs for longer, because we can't have everything going on at once. But we would get through it. And the shale oil revolution has just changed the dynamics of how the world works, of how the flow of money works, and how oil works. By the way, Israel's bombing campaign in Iran appears to be exactly what it took to get Iran to actually negotiate seriously with the United States. Reinforces peace through strength. And I am very, let's keep going, okay? I'm impressed and happy that the United States is backing up Israel, putting destroyers off the coast of Israel, shooting down Iranian missiles and drones, and I am very happy about that, for one. And I hope everybody's okay. And I don't want to get too political here, so let's focus on the economy. Oil is not as important globally anymore. Russia would love for Iranian oil to be cut off, because then they would just sell their oil to China and to India for even more money. But Iran's oil goes to China, so that would hurt China. So China's watching this very carefully. So if anybody's going to have a problem, if there's Iranian oil is cut off from the rest of the world, it's really China that's going to suffer the most, not the United States. Europe will get hurt because as Europe got off of Russian oil, they had to replace a lot of that with American shale oil, but they also had to use a lot more Middle Eastern oil too. But the United States should be okay. Now, the war looks to be contained. It's not spreading. Iran is not firing at American bases. It's not going after Saudi Arabia's oil complex. It's not really doing much of anything except for lobbing some bombs into Tel Aviv and Haifa. It's terrible what's happening, but it's not the near total destruction that Iran claims to have the ability to inflict that on Israel. And Israel is just going to keep bombing the hell out of them, and they'll probably do things and know things about Iran that Iran has no idea. This is a complete surprise to Iran, and Israel now has complete air superiority over Iran. And the countries are separated by about 11 or 1,200 kilometers, but nonetheless, when you have aircraft, it's not a big gap to cover. All right, so we've had a really good earnings season. Inflation has been contained. And so far, even with the tariffs, there really hasn't been anything much to complain about. Now, it was expected to happen in May that we would have inflation and the tariffs that hurt. We're past the midpoint of June, and we're still waiting to see the negative effects of tariffs. Now, I can tell you that manufacturing figures came in today a little weaker than expected. The Fed meets this week, and they're not expected to do anything with interest rates. And I think what happens is a lot of this stuff with higher oil prices, it puts the Fed off. Now, if higher oil prices are up, not because of demand too strong in the economy too strong, but because of a shortage of global oil, because Iran is in a war, to me, that should behoove the Fed to actually cut rates, not stay pat, because not all inflation is the same. And I think we could use a little help. So let's see. We have somebody in the comments section. Hey, Lori says hi. Thank you very much. Please tell Lori I say I love that picture of you two. That picture I'm looking at of you two was taken at Prime, right, in Huntington. Wow, that's a great picture. Thank you, Jerry. Hello, Laura. Hello, Lori. Excuse me. So, yeah. So those are the things that are happening. We're back to focusing on economics now. Looking at past wars, when we had the oil embargo, and the Middle East, led by Saudi Arabia, would not sell oil to us. That put us into a pretty steep recession. So ever since then, when oil goes up a lot, it's a knee-jerk reaction to say, what about the economy? We could go into a recession. Again, we are the biggest producer of oil in the world. We might have to change our refining capacity a little bit to help refine the sweet oil that we make. Sweet meaning less impurities, less sulfur, easier to refine. We're really geared up toward refining heavier crude as opposed to the stuff that we get out of the shale resources. So this is a non-event. I'm not worried about it. I'm not saying the market can't go down, but the stock market can always go down for any number of reasons at the same time or at different times. And we're not going to know truly what the reason is until a good deal later. I don't expect this war to really spiral out of control. Nobody wants it. No one is backing up Iran. The U.S., however, is backing up Israel. So there's no way that Iran is going to win this war. No way. And I think that gives comfort to American investors. So having said that, give you a little bit of a feel for what's going on. And now we have in 2 weeks, we have the end of June. And in 3 weeks, we're going to start getting earnings for the second quarter. And we're going to get CEO and CFO forecasts for the third quarter and for the rest of the year. Tariffs are expected to be a bigger part of the inflation picture sometime in June or July. But at some point, if they don't happen in June or July, we're going to really have to question the merit of saying that the tariffs are inflationary. I believe the inflation is coming. But again, I am not making major financial decisions for clients on anything except their goals, their time horizon, their life cycle of when they shift money from stocks to bonds to cash, helping them decide if they should buy that second home, if they should keep their home in Long Island or wherever they live and buy that second home and move somewhere else. I help them figure out what the tax ramifications are going to be living in another state. Do they have to change their municipal bond portfolio? Can they buy different kinds of municipal bonds because now they're a Florida resident and there's no state income tax? These are much more important things to talk about. It's just that a war, geopolitical events are very exciting and they hold our attention. But if you recall, the war in Ukraine was expected to be tough for markets. The first massive and biggest massive, ground war in Europe since World War II. And, judging on how the stock market's done, investors don't really care. I'm not saying investors as individuals that were callous, but when you look at the stock market, when you look at what we're investing for and the economical reasons, the economics behind it, the market's going to sidestep geopolitical events. Now, if we got into a war with a much greater adversary, like China, for example, that would be a big deal, a much, 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 much bigger deal. But this whole thing with Iran, with a basically no navy, a crappy military, really pathetic Russian arms and air defense systems, this war is probably going to be over pretty quickly. And the regime in Iran is in trouble. They know it. And I do expect a surrender from them, if nothing else. Now, I'm not saying I'm all of a sudden, what, you're making pretend I'm a general and I'm calling shots in the Middle East. I'm telling you what I'm thinking, but I think this is agreed by the markets in general, that we don't get worked up about geopolitical events. And this one too shall pass. So keep investing. If you're worried about how wars and the price of oil could affect your portfolio and impact your ability to pay your bills in retirement, and you're thinking about getting out of the stock market, it could be you haven't found the happy medium in terms of how much you should be in the stock market, how much you should be in the bond market, and how much you should be in cash. And that is a very worthy discussion, much more so than worrying if you should buy or sell NVIDIA or Uber stock, because of what's happening with this war in Israel. All right. So wish everybody well. Thanks for listening. If you want to get into a deeper conversation, reach out to me direct. I'd love to hear from you. And let's hope for good things tomorrow. All right. Thanks. Have a good night.